Hey guys, what's up? So this is my watch list for the week ahead. The markets are looking phenomenal. So right now we are in a bit of a time where we need to be a little bit more patient with our pairs. The reason why I'm saying that is because we've got the DXY, which is positioned. If I show you on the weekly, actually, it's quite interesting. We have this overall higher time frame sort of corrective squeeze that we're in, but the price is moving pretty impulsively within there, so we can still catch some pretty good trades. Ultimately, we are within this accumulation stage over here, but we are within this large structure. So even though we've responded to this, we don't necessarily have to go short, but it is looking pretty good for the short. Right now, what we're seeing on the daily is momentum moving to the upside within this overall range here. Now, one thing that I do like about this is that when we look at it a little bit closer, price has just really rapidly moved, meaning that bigger players have stepped in these areas here and they're just pushing price to the upside. It's very, very likely that we're going to see the DXY coming back up into these areas up here. And as we look at it on the 4 hour, we can see that price created a base here during elections. We just kind of impulsively moved to the upside, and now we're just kind of continuing to the upside. Now, with where price is now, we may see price kind of just sit within this area. There's a lot of different variables of what price could technically do before it goes higher, and I don't think that's the scenario. I think what we could see is maybe more continuation and price just continues going. At the same time, this could still become a large range where price does do something like that. There's a lot of variables of what price can do. I think right now it's a bit too early to speculate on price ultimately. I think what's really more probable is that if we do get continuation and we fill these areas, then we can kind of see how price responds to this area here to see if it comes back down, and then we get a pretty good sequence to the downside, trade into there, and then that's kind of what I'm ultimately looking for. However, at the same time, price could create something in here, giving it enough momentum to kind of just break through this, creates more continuation up here and continues. So it's a very neutral area to be in, because if we do get something like this is still pretty good for me to go and take a short on the counter related pairs. But then we could see other pairs like the USD yen, USD Swiss and so forth continue to the upside. So there's a lot of decisions to be made when price kind of reveals itself. For now, I think I'm keeping it very simple and just kind of locking in at a range like this to then see what happens. It wouldn't be surprising to see something larger form, and then it does something like that to eventually come higher. At that point, I would probably look for continuations in this area to then go long and then get positioned in there. So it's one of those ones, as I said, it does require a little bit more patience, but I think for the week ahead, there's a lot more interesting pairs as well, besides having to fully focus on the USD pairs this week. We can see with the SPX as well, the US 500, price is just rapidly making all-time highs, which is very nice. We didn't quite completely fill the base again. The US elections came out and we moved. That's completely fine as well. Now that we're trading up here, it's one of those ones where we are looking for more continuation. So again, if we do get continuation and price just does something like this, then we can take a clear message from the market and go long. I wouldn't really say that's a bad trade. I'd say that's still pretty good. It's just we're trading into all-time high territories. There's no definitive target, so we could price it up like that and we could see price continue moving to the upside. We are very much extended, so a larger pullback is also possible. If price did just happen to just decline, come back into this range, then again we may get a nice sequence to the downside here. I just don't think that's the most probable scenario given how everything is. We just have to wait and see how the SPX develops. But on the related pairs like the US 100, US 30, there's potentials for shorts in there. So that's one of the reasons why I think if we were to get a pullback, we could potentially get a pullback into one of these ranges to then potentially create something like this to then go long. So again, it's one of those ones where it just needs a little bit more time for it to develop. We have the JP225 as well. JP225 is actually one of the more interesting ones this week, because Although we are looking a little bit more corrective in the sense that price has just been kind of doing this up and down movement, what we see here is when we go onto the 4 hour, we can then see that there was this level of structure here. So what I'm looking to see is if can we play this potential trade to then come back down into these areas to formulate a base for it to then potentially look for ultimate longs, and then that goes in line with the weekly as well. So as we see it on the weekly, price did sell off, tap into these areas, and then it's just really heavily pushed to the upside. So I am more on the side of looking for longs, but I'm not completely crossing out the shorts because I think there is room for shorts before we go long. So going into it a little bit more closer, I'm kind of looking at this as like a base for it to then create two bottoms, come in for the top, push down, more insurance entry and go short, and then we should see the related pairs also shaping up to do something similar for us to then potentially take some trades in there as well. But from a JP225 perspective, it's looking pretty good. It's one of those ones where we do have some inflection points along the way which we could respond to as well. So in terms of management, I'd be managing a little bit more cautiously into these areas and these areas, just because those are areas where price could pull back without having to come into that ultimate sort of base level that we were looking at. So that's basically how I'm looking at the JP225. But going into the top 6 now, this is looking a lot nicer. So we're looking at New Zealand US dollar, and as we know, the DXY is in a rapid bull move. As we can see, there's a lot of room for it to come to the downside. So in terms of positioning, although we have a near miss here, we did technically fill this level here, and then we responded from that and went, and we got some pretty good weekly momentum in there, which is really nice. Now we're trading back within this ultimate range. It does make sense for it to come into these areas. So then as I go back into the daily, we can see that this is our range. This is where price is accumulating, so any trades within there are a little bit more risky. However, as we look at it into a technically into a push 1, push 2, push 3, if we can get structure in there and it's clear enough, then we could potentially take a risk entry to get short, which I think would be really nice. And then that would be while the DXY is correcting. So I am going to be looking for something a little bit more deliberate from price. So I do want to see something like a 1, 2, 3 internally to maybe even retest a little bit of liquidity there, or just see how price formulates here to see the continuation to go short. But in an ideal scenario, this is what I would be looking for, because that would be weighted enough for me to then take the next level into that low, and potentially I could actually get in with around about 10 to 12, 15 pips and then manage it into that low, which I think is really nice. Aussie US dollar, equally, again, another pair which I think has a lot of potential. It's similar to New Zealand US dollar, but from a high time frame perspective, it looks a lot nicer because it's technically filled this whole area. From a psychological point of view, it's done a lot for it to now continue to the downside. When you look at it on the weekly as well, you can also see that there is a lot of momentum there. We can see here though that, and I see this time and time again, where we get these sort of indecision candles here, and that's kind of just formulating a range for us to kind of look within. So right now it's one of those ones where even if I take a trade in here, I'm conscious and aware that price can still come all the way back up here before we go short again. So it's just something I will be mindful of. So again, I am going to be looking for something a little bit more deliberate, and I want to see that deliberate price action. But right now, when we can see on the 4 hour, we have so much momentum pushing to the downside, there isn't really much reason for it to come up here. So when I do refine it a little bit more and look at it on the 1 hour, it's then, are we creating the footprint in these areas to then push down, push back up, tap into it, and then could we get a 2 touch with an insurance entry to potentially play short term to then sell off back into those lows to create a base, and then look at those areas to see if price does respond and come back up for the 3 touch, then we can get positioned again. And on that particular trade, we may get in and out with a small intraday profit, or if that continues and that essentially just happens to be a 2 touch and then the momentum kicks in and it continues, we're still positioned in for a good trade. So either way, even if I get positioned in here, I probably will still be looking at something around about 10 pip stop loss, maybe a little bit more. And then to the low of this, I'd probably be managing at break even for the potential for this to just really follow through. But the best trade would be the 3 touch, because it's a little bit more confirmed, a little bit more weighted, and it's with the high time frame. And then I could take that into the low for about 5 to 1. And then if it does continue and breaks through, which at that point would be more probable, because then we would size this up take it from there, and then it makes sense for this to break out to the downside, and then we can look at the next price targets, which are all the way down here somewhere with a wick fill. So yeah, for a pair, Aussie US dollar and New Zealand US dollar do look really, really good. New Zealand CAD, equally, I think this goes in line with the New Zealand US dollar sort of thesis. We can see here on the weekly as well, again, you know, we're looking at that push down, the corrective push here where it's kind of working as a bear flag, and then we're looking at the continuation for it to continue to the downside. Don't usually zoom out to the monthly, but we can see on the monthly that overall this is just one big piece of corrective price action. It's accumulating a lot of volume in here, and it's not the cleanest, so I'm not anticipating very directional short momentum, but it's possible. So from a higher time frame perspective to the lower time frame, we can see that there's a lot of potential in here for this to go short, and then we can be trading to these inflection areas like this one over here, and then to the low down there. So I think there's a lot of room there for a 5% trade to turn into maybe around about 9-10, and then potentially just follow through, but only time will be able to tell. EuroCAD, likewise, I think this is another one which I think is quite interesting, because what we can see here is that although we've responded to this level here, and I'll zoom out quickly over here, we can see here, if we zoom out, we can see that overall it's not the cleanest of price action. However, when the momentum does kick in and the sequence is there, it really does tend to go. I don't think this is the most valuable area. However, what we can see over here is that price is looking like it's accumulating to go long, so this is one where I am going to be a little bit more neutral with the position. However, what we can see here is that if that's the overall range, if we can break that range and create continuation just below it, that would be more than enough for me to then trade into the next point of interest, which would be there, and then I could probably get in for roughly around about an 8% trade, or even tighter if possible. So that's what I'm really looking at, and then if we do continue with more continuation and we follow through, this could really turn into a big trade with the potential for scaling opportunities. So that's kind of one of the main things that I am going to be looking at for next week. I think out of a lot of the pairs on my top 6, EuroCAD is definitely looking at one of the nicer ones as well. CAD Yen, so again, this is another one where I'm a little bit more neutral, and I'm going to zoom out to the monthly, where we can see, you know, we have this point up here where price is pretty much directionally moving towards. We can see from a monthly perspective as well that, you know, we had this area of interest here, we responded, we wicked through it, washed a lot of people out, pushed out, we kind of went there, failed to continue to the downside, pushed up, and now we're getting that bullish momentum. So it's one of those ones where if we are continuing to the upside, we need to create continuation to continue. There's a few areas of interest, but this would be my main line in the sand to really see where it goes. What I do want to see from this is that how we respond to this overall bit of price, because I'm just trying to pattern separate it for what it is, and we can see that, you know, this was one piece of its own and that's one piece of its own, and then if we complete on that, then we continue going, and then we could definitely see price come up to these areas here, which is the more preferred area of interest to trade. As we can see within this overall expanding, this is more for section 1 here, section 2, and then we're coming in for section 3. The only thing I'm looking at is if we're coming into these areas, it's probably likely we'll tap into that low and then go long. So for that reason, I am going to be looking for the shorts, because a trade here, which I could potentially take for 4%, could drop off a little bit, and then if we retrace in here to come back up, and then we get continuation, I can get involved in here for the long. However, if we do follow through and continue, then the trade that originally, which I would have been looking for roughly around about potential 5%, could turn into roughly about a 10%. So again, its positioning is pretty good on this one. I don't think it's going to be very impulsive. I think, you know, we will just have to wait and see. But then you can see a little bit closer where I would be looking for something where that's the footprint. Price is then correctively making its way back up here. Maybe internally there's something that we would have to read through and kind of get a good idea of where price is going, get the retrace, and then we can take the trade into these areas and then evaluate closely as we break. So that's kind of what I'm looking at for CAD yen. Obviously, again, just to kind of zoom out on the daily, you can see that if we do respond from these areas, the long is looking really good, because again, if we do get positioned in here and price does start to move, it's very unlikely that price is just going to dip and come back up into those areas. It has no reason to. It's probably just going to continue and start making its way back up, as we've seen previously with a lot of price action on these yen related pairs. We can see that, you know, once it's ready to go, we might just see something like that, and then price just, you know, makes its way and just continues going. It could be one of those ones where we just sit and hold it for a longer period of time, and we don't see a huge progression over a short period of time, but then over the course of the remainder of the year into January, we may even be somewhere up here, which is kind of what I'm really looking at to see how price responds. And then if we get something like that, you know, that could be really good into December. And then January, we're all the way up here somewhere. And, you know, we look back on the trade and we're thinking, wow, okay, positioning was actually really smart in those areas, and we could have taken full advantage of that. So that's basically my outlook on CAD yen. Euro yen, on the other hand, I'm not looking for the long as such. I was, but then I kind of see it as, you know, it's done more than enough on a higher time frame perspective to see the short play through. If we look at it from a base level, we haven't really tapped into this level as a base. If we responded from here and started pushing higher, then I would be a little bit more on the side of, okay, there's more of a reason for it to go higher. So that's why I think the mix between looking for the short could be very strategic, because if it does follow through, we have quite a big move to go short. Again, another exciting pair to be looking at. We can see from a weekly and daily, we have the momentum kicked in now. This is really nice. We just need to see the follow through continuation. Again, if we can get something like this, perhaps maybe this was drawn on a little bit too large for accumulation, but it demonstrates the idea of what I'm looking for. And I will be looking for this continuation in this area to then potentially go short. And then with the short, I'll be looking at this ultimate range here to then look for multiple scalings and positioning within there. I do think that if this is the one to go for the shorts, it may be something which is a little bit more strong with the downtrend. So we could be seeing something like this, where price just really starts to just go, and it gives us these tighter continuations and it just kind of rallies through. And that's kind of what I'm looking for on Euro Yen, because again, from the higher time frame perspective, it's done more than enough. This pullback was just accumulation, and now we just need to see how that really responds. The main inflection area I will be looking at is this one here, and I just want to see how price responds to that area. So again, if we can come in here and the weekly closes out here somewhere, that's great. We might get more continuation in those areas, and then boom, we just continue, get another continuation, and then we continue, and then next thing you know, we're trading all the way down here, and the small trade that we thought may be running for 6% is actually running for a good 18-20%. So again, there's a lot of potential in the market right now, and I think for the top 6, these are really prime, high probability, really good trades. Some a bit more on the higher risk side, but ultimately the trades are there, and I think that's what I'm really focusing on. I think CAD yen for the counter trade is looking really good as well, so I'm definitely going to be keeping a very close eye on these ones. Monday may be more of a accumulation day, but again, with how some of these pairs are shaped up and how much time they really need to create the weight, we may actually see a few trades on the Monday as well. But ideally, I think Tuesday, Wednesday will be more of the active trading day. Looking at the additional pairs now, we can see that with New Zealand yen, for example, we are in this state of accumulation within this range. What I do like about this though is, if we look at it from a weekly perspective, we have tapped into this area here and responded pretty well. So again, similar to Euro Yen, I'm not really in love with the long, but the long is still a potential. I think the short is just looking really good. Right now we did have a push up, a push down, we didn't really feel anything, and then we pushed up again, and now we're just creating this larger continuation. So I will be more vigilant when I am taking this potential trade, but I think for a trade here, I can manage to break even as we break the low of that structure. As we come into that inflection point, I'll be running around about 6%, and then we're looking to fill all of this, where this 10 becomes a 10% trade, give or take. I could get out of the market at that point anyway, regardless. And then at the bottom of the range, we can then see if we're looking at reversals and so forth. In terms of momentum, there is a lot of momentum here. The psychology of this trade is just phenomenal as well. You can see that, from a mechanical perspective, you can see we've taken out this high, sold off. We didn't quite go anywhere to the downside. We've left multiple gaps to this low, and then eventually we did take out this high and this high, broke out, and then we pushed to the downside aggressively with momentum. So we can see where the bigger players are stepping in and how we can get positioned. I just need to see some deliberate price action and structure. It doesn't have to be the cleanest in the world, but I do need to see sort of a base internal structure meeting with it. If we do get a clear 1 2 3, that's even better. Even if it takes the course of next week to develop, that's completely fine with me as well. I just want to see that level of deliberacy in the market, then I can get involved and then look to get positioned to go short. 10 pip does seem a little bit tight for me, but depending on how price shapes up, it will be a 1 hour trade for me. If it's a larger flag and the 4 hours there, then I will go for a 4 hour entry, but I think more than likely with the momentum, we may not actually get those large continuations. We may just kind of push, create something a little bit tight and just continue going. So again, this is one that I think could be really nice coming into late Monday, Tuesday London session ideally. So again, demonstrating a really good area to look for shorts again on the weekly. If we look at Aussie yen, we can see that Aussie yen has tapped into this area of value and also taken out this one here. So if I just mark that on there, we can see here, obviously we do have points above as usual, but we don't necessarily need to just completely rapidly make our way to those areas just yet. We just know that they're there. What we're really looking at here on the daily is that with the weekly and daily, we've just really pushed away. We didn't create any sort of key level base. I think again, if we tapped into these areas and we went, that would be interesting. In a way, it did feel like we were retesting the back end of this, and then we just kind of retested that, and then we kind of pushing our way to go to the upside, which I don't think is completely wrong. I just think that it's one where you want to stay a little bit more vigilant and sharp with it, because then if we isolate price action here, we can see price came down, didn't really do anything, kind of call it left a gap. We have that wick as well. We left a little footprint over here where there's a smaller consolidation, and then as we approached up, we correctively came, and then we created this internal reversal structure here, which I think is really nice. Something as well which is really important is when you look at it on the daily, you can see that the daily actually retraced the majority of this price action here on the last leg, and we had a middle section. So positioning in these areas is actually really nice. It's possible that we could retrace that candle 50% and then reject as well, so that's something I will be bearing in mind. But more than likely, I am looking for deliberate price action again, as we saw with the other yen related pairs. I am going to be looking for something a little bit more weighted, and this would be more on the side for me to look for a 4 hour entry, only because of the size of the structure and everything that I did mention with how it could pull back and so forth. So I think this is really nice. Again, I just need to see some weighted price action, because if we do get that, what would be nice is that we have that as phase 1, phase 2, phase 3. This then gives it enough weight for it to then push and then make its way potentially back into these areas here. And then a trade that we could be looking at to the first inflection point could be a 6 to 1 to the bottom of the structure, around about an 8 to 1. And then if it does get the full follow through, we could be looking at 14, and then opens up the floodgates to potentially actually just start making its way to the downside. Now, would I be holding for the full 50%? Very, very unlikely. But again, we're not always just looking at that one trade. We're looking at the multiple trades that could be presented within here. And yeah, ultimately, I think that's something which is quite exciting to be looking at for the week ahead. So for me, I think I'm very, very much interested in just seeing Aussie yen and New Zealand yen to see how they play as well. Euro USD, so Again, it's one of those ones where I think I've had EURUSD on for the majority of the year. There hasn't really been a time where I haven't really wanted to have it on watch, because it's just relentless. It just gives opportunity after opportunity after opportunity in many different ways. The one thing I do like about this is, as you can see, the momentum has really kicked in now. We can see there's multiple opportunities for us to get involved. The good thing is that we haven't had any larger pullbacks, so if we are looking at something now, we could probably be more likely to see something on the side of a typical structure that we would trade. I'd be looking at this as a footprint to see how we reapproach that area, to then look if we can get positioned for a short. Now, again, this would be more of a 4-hour entry for me just because of the weight there, but what I would be looking at as a variation internally is if I couldn't get the entry in there because it was too large and I set a pending order and I couldn't just get involved for some reason, I would be looking for the insurance entry, because ultimately within here, this would be the main area of interest for me. I'd be looking for the sequences within here to then look to get involved for the short play. And you know, I could be getting positioned in maybe 3 or 4 positions on the way down alone. So again, maybe not 3 or 4 within that, but you know exactly what I mean. I'm just looking for that sequence for this completion, and I think the risk entry in this area would still be good. Even if I opted in for a larger stop of 40 pips, I still wouldn't personally mind, because I still would be able to get involved on some scaling opportunities along the way. So for EURUSD, I think this is looking really good in terms of price targets. You know, I've got the little gaps over here, which are nice. If we can keep those gaps on ball, then we know that if this then does complete, it's even better. But if we create the continuation through it, it's even better. So I'm not looking for it to basically tap into the low and then reject and start coming back up to create this. I'm also looking for it to either follow through and break it, retrace, come back up, take the trade from up here, or just really kind of just identify what's happening with price. But this little hook point over here is very deliberate, and it's not necessarily very key for it to come all the way back up here, but I think if it's hovering in this area long enough, and we know the DXY is kind of, you know, in that area where it could just be accumulating, I think something like this could be very deliberate. And again, while this is shaping up over here, we go off and look at EURUSD and it's shaping off something over here. So that's something that I will be looking at very closely throughout next week. I think it could be something that comes in late week, and then if that's the case, you know, we may see something similar on New Zealand yen and Aussie yen, where price does happen to follow through, but then it just gets a little bit more messy and we just need to read through the price action. So again, not yen, sorry, the Aussie US dollar and New Zealand US dollar. So again, it's one of those ones where I think we have to be a little bit more vigilant with the positioning of the DXY and understand that if it does get corrective, then we need to take a step back, preserve our capital, and then look at potential opportunity once the structure has been presented. So the course of next week could be corrective, and then going into the week after, the structure could be there and we're all ready for it because we've been monitoring it, and we've just basically been aligned with the market. So something that I wouldn't really just kind of not have on watch. I would be very, very conscious about it. Euro Aussie, I think, again, another pair where we've tapped into the value area there, we've pushed away. We did leave a bit of a gap here, which is completely fine because we can still come all the way down here before we come up and even fill any of these gaps or even make our way back to the upside. I don't really see any reason for it to come back to the upside at this point. I just see this a little bit off-putting because it's just corrective, but what we did was we correctively came, no surprise, came back up, tapped this area, pushed away, and we can see that with all of this, that's where the bigger players were stepping in, accumulation, and now we could look for the next move to the downside. And I think this could really turn into a pretty good trade if we get the follow through and then prices down here, we get more continuation, and then you look back on that and you're thinking, well, because of that little gap, I just avoided a trade here, but you missed the bigger picture. And the bigger picture is really that we've taken out the value of all of these areas, we've retested it, and price is just really rejecting. So there's really no reason for it to really come up. However, what we do need to understand is price can still tap into these areas, reject and go long, similar to how we were looking at CAD yen, and then price just makes its way up. But again, we are analyzing it on the weekly right now. So if we're looking at it on the daily, and we know that it's probable for price to even come into these areas and these areas, then we're looking at a 5-to-1 to this area, we're looking at 8 to 1, and then potentially the floodgates open, or if it does start to reverse, you'd still be getting out with in the region of anywhere between 5 to 8%. So that's what I'm looking at. And then you go into lower time frames. If we get the structure, it's all there. Everything we need is there, and we can take it. As a minimum, I'd probably be walking away with a 3 to 1 on this as well. So as we approach these lows around about here, and we're running around about 5, I will be locking in 3 aggressively, and then I'll just wait to see how that develops over there. As we break those lows and we start going into 7-8%, again, I'd be moving to about 5-6% over here, maybe around about 5, just to give it a little bit from there in case it comes back up a little bit, and then see how price moves. So I've kind of already mapped out my management before I've even looked at the trade, before it's even fully developed, but that's usually the thought process behind it, so that you're well prepared for in the moment, and then the morning forecast as well. Then we go off and look at New Zealand Swiss. Sorry, I had to cut the video off there for a second. New Zealand Swiss, and then we basically can see over here that this is looking absolutely interesting. Right, the reason for it is we've pushed away, but we haven't really responded in any major way. So where we thought this could be the base, and price kind of created some sort of bearish pin bar at the bottom, we can see that the clear indecision there, where when we look at it on the daily, what did price do? Price correctively came sat at the bottom in the form of an expanding, looked like it was going to continue short, pushed all the way up, and then retraced back down. This is an interesting scenario, because where we would look for potential longs for this to really continue as a large continuation to go higher, it made a lot of sense for this to now reject and continue lower, and then this actually becomes a short. So then we have to look at this a little bit closer. If we can get clear continuation here for this to then push, give us continuation in these areas, this could be very strategic for us to go short. I think what's nice as well is if you have your stops above this little line here, you should be pretty good for the structure. If the risk entry does come, just make sure it's there. But ultimately this looks pretty good in the sense that we've tapped into those areas. Even though we didn't really break through it completely, we tapped into it and then we rejected, and then you look at it on the 4 hour and the daily and you can see the momentum kicked in. So now we just need to see accumulation of volume. Again, this is another one which could take a few days. This is just the quick short scenario where this would be enough, but at the same time, if we look on the hourly and then this corrects for a pretty large period of time, either this area or this area could be the top, and the structure just formulates in here, and then we look to go short, and then I'd be looking to refine that on the hourly or even a 4 hour entry, depending on how it really shapes up. But at the end of the day, I think this is exactly what we need to be seeing for the continuation to the downside. And then I'll just switch over to Aussie Swiss quickly, and I was very close to putting this one on watch. Again, as we can see, the subjectivity around it, because this does look like it could be continuing higher, and I think that's slightly a part of the trap there, where we could get continuation in here, and then as price formulates continuation in these areas, which we are still on the 4 hour, we could then see it here, and then it just continues for its move lower. And then as we look to get into these areas, this is where price could maybe even evolve a little bit. We then look at it as that could potentially become a base for it to then move higher, but then still at the same time we can still get positioned in from an A to B into those areas. Zooming out on the daily, you can see as well, it's not the best in terms of sequence right now, but the trade is there. It's just, would I have liked to see price tap into those areas and then have this rejection? Absolutely. So in terms of positioning, it's not the best positioning in the world, but there could be a really good trade there. And the reason why we see that is, even though we had this originally and it wasn't the cleanest, price then came in, tapped into that area, rejected, continuation, pushed, created volume there, pushed in, pushed all the way back up, re-tapped into that area of volume where the liquidity was sitting, and then it rejected. And then you can see from the daily there how we just had a heavy rejection. So what we do want to see now, following through with that rejection here, is that we get continuation to then play the short into that area there. So I'll just remove this ray line over here and I'll put this one on here. And if we get something like that, where price just kind of correctively squeezes, we could probably take the trade there. And in terms of positioning, if all is good and it's on point, again, I'm analyzing on the 4 hour, so obviously it would be looking a little bit different to this. I can still get in there with even a 18 pip stop loss. There's a 5 to 1 into that low there. And then when you zoom out on the daily and then you see something like that happen, you're like, that's no surprise. And then you zoom out a little bit further and then you see it. And price is a little bit corrective right now, but then when it starts to follow through, you know, this could turn into a pretty good trade, because when you look at it from the higher time frame perspective, what reason can you tell me that it will have to just go up from here? And there isn't a huge amount, because price is just hovering, but it is a Swiss pair, and Swiss pairs, what do we know about them? They can just correctively move for long periods of time before they commit. So that comes with the territory of taking trades within these ones. But as we've seen recently, the Aussie pairs have been responding pretty well to structure. So again, if we did get something clear and definitive like this, I wouldn't really hesitate on it. I would take it and then just understand the territory I'm in. And if price did mess about for too long, then I would get out manually and just not get positioned back in for a while. But ultimately, if I did get something like that, I'm not really going to hesitate on it too much. Obviously, I understand the two main areas where something could happen. Of course, if this develops into something a little bit larger, so be it. You know, then we just look to take something a little bit larger and we take it from there. But I think for now, I'm going to keep it very simple and just look at it like that. If I get something like this, I'll look for it. Hands down, I'll take that. I'll probably risk entry it as well. Would I go with, yeah, so 10 pips, even 10 pips covers me all the way up here. So really and truly, if I'm taking the trade with 8 to something, I'm happy to add a little bit extra on that 15 and then just see it kind of be that trade. Because at the end of the day, if that did follow through, there would be scaling opportunities, but at the same time, I'd get in pretty safe for the trade, and then I could get in and it could turn into a pretty mega trade over time. But again, I'm just going to say it's for the pair it is, because it is a Swiss related pair. I don't think it's going to be so impulsive to the downside. We could be surprised, but it could take its time, and that's one of the things when you are taking trades in here, that price can just really take its time, and the next thing you know, we're kind of somewhere in December by the time price gets there. But personally, I don't mind taking a trade and holding it for that long if I know that it's good enough and I can get positioned in well enough. I just probably know myself, and I would be looking for the more refined trade. I'd probably be happy with 7 pips if the spreads are there, and I could take that, and I'd probably manage it into these areas for a 10 to 1, and I'd be more than happy with that position, and I think a lot of people would be. And then we can see that, you know, that would be the area of interest where I'd be looking to kind of exit my trade around about these areas, not for any other reason than just seeing it kind of within all of this. It's just, I'm not looking to hold into New Zealand Swiss for a longer term trade. I'm just kind of looking from an A to B, from this area to this area, but understanding that it's not going to be very directional. It could take its time and just kind of make its way like that. Euro GBP, again, it's another pair that I think could go missed. What we can see here is that not the most quickest pair to move, but there has been quite a lot of trades in there that we could have taken full advantage of. If you look at it from a daily perspective, this is overall corrective. You look at it from a weekly perspective, it's moving to the downside, but it's not really rejecting from any key area. It's really taking its time to get to these areas. But more importantly, if it did get to these areas and it did follow through, it really opens up the floodgates for this to come into an absolutely mega trade. Do I think it's going to be that one? I can't really tell you right now. From the way it's moving, I think, you know, eventually we could be looking at this as the overall range to potentially go long to come back up into these areas. But for now, when we look at it more on an intraday level, we can see from a high time frame perspective that this can, it doesn't really have the reasoning to come all the way back up here just yet. And for that reason, I think if we're looking at the trade for a trade, I think the shorts are much better, and we just need to kind of see a follow through now. As we're breaking this low, there's nothing really to the left that's really stopping me. There's this small inflection point, but then when I look at it and I measure it from here to here, that's roughly around about a 50 pip difference. So I don't think that's going to be the point of where it rejects and then just kind of goes all the way to the upside. I think it's likely to come all the way back down to the downside. So a trade into that little sort of small area would have given me 5 to 1, and then we're looking at the ultimate 8 to 1. Not the best in terms of risk reward, but if it's there, it's there, and I'll be more than happy to take it. I'm waiting for the deliberate structure now. How this shapes up is still slightly undetermined. I will be waiting for clear deliberate price action, so maybe it continues to sell through, creates a base there, and then essentially what it does, if I can get this on properly, is that becomes your base level, creates a 1, 2, 3 internally, and then we just get short in there. And obviously that's 10 pips. I'm still covered above that little ray line. I'm kind of happy with a trade like that. This is not my most preferred. In fact, this is probably my least preferred trade amongst the whole watch list, truly. But again, you know, we can be very surprised with the momentum kicking in. We might get a small continuation and it just follows through and it just continues. Again, it's one of those ones where it's not been very, very quick to move. So accumulation sort of point of view, I'm just trying to look for the right tool. There it is. We could see something which takes its time, comes in here, and over the course of November, it's just corrective. And then into December, we start to see it sell. And I think that is also a strong possibility as well. So again, it's one of those ones that's just kind of as an additional pair. If it shapes up, it shapes up. If it doesn't, it doesn't. It is what it is. So that kind of covers up my additional pairs of my top 6 and outlook for the DXY, SPX, and the JP225. Pretty much ending this off with the extra pairs that I've put on. So what I'm really looking at over here, and if I just go on to the weekly for Aussie 200, sorry, I was doing a bit of studies over here, so I'll just remove that. What we can see over here is that price has broken out into all-time highs. Now, is that technically a bad thing? Not really, because what we do know about these all-time highs is sometimes they get taken out and then they reject and come all the way back in. Now, that's what I'm kind of looking at for the next week, where I just want to see a response where price kind of on a daily pushes back below that ray line, and then we look for continuations, and then by the end of the week, we've actually retraced at least 50% or more of that candle, and then maybe we could see some short-term price action where we can get a little bit more aggressive with it. If I look at it on the daily and we get a little bit closer on that, we can then see that price was pushing up, tapped into that area and left kind of this sort of area where I see this more as a potential for this to be more of an evening star situation, where we've broken above. People are now like, oh, SPX is going really long, US 100, which we need to get continuations to go long, which you're not completely wrong with. But at the same time, where everyone's trying to go long, isn't it a better time for us to look to go short? From a phase 1, phase 2, phase 3 perspective, I'm not seeing the best of structure, but what I can see is that we had this and it did end with an expanding as well. So what I do know about these patterns is that even though this channel was overall corrective, we ended with an expanding at the end here, which works as continuation or reversal. In this particular case, I may be looking at it as reversal. So again, it makes sense for this to wash out everyone here and push back in. I then look at it on the 4 hour. I want to see a follow through. I don't want to be taking any trades up in these areas for the simple reason that this just turns into that and it continues higher. Then yeah, you could argue the buy there, and it's something that could be looked at, but more likely I am looking for the short. So I want to see a follow through breaking back below that ray line and then deliberate continuation to then go short. And I think for me, that's the perfect play to then look for that move, because then I can manage into this low for a 1-to-1 as a break even, let's say. And then as it opens the floodgates, there's nothing really stopping this from really going. And then it makes its way all the way down here. And it could be very, very impulsive. Understanding this pair with maybe another scaling opportunity as well, and then that turns into like a 12. Probably get out for 10 personally around about here, 90% of this overall range. But like I said, this turns into a mega trade, honestly, and I think something like that in terms of positioning, sequence, the overall high time frame picture, you can say I didn't even have to go to the 1 hour, the 15 and the 5. I can get positioned in there. Would I refine it? Yeah, absolutely. I'd go to the 1 hour and look for a 1 hour refinement on that, depending on the size of the flag, but ideally that's what I'll be looking for. And then if there's continuations on the way down, I'll probably be looking at that. But there's no reason for me to go to the 5 or the 15 on this particular pair. I'll be honest with you, the 1 hour is more than enough. And I think if I can't see it clearly on the 1 hour, then it's not really there. If it just goes and it doesn't give me any entries, which I think is also a strong possibility, it is what it is. At the end of the day, we do see things like that happen all the time. And I'll just show you an example like here, where price just kind of rejected. And then you can see it from the hourly perspective that we just didn't get anything. You know, we had this continuation pattern here, sold off from there, and we just couldn't see anything clear on the 1 hour. So again, it's something that with experience, I'll be able to read through and understand, but it's something that I think you have to go off and just study and understand. And sometimes these things do happen and we have to accept it. But again, there's a lot of opportunity on the board here. If we can't catch the trade, it's not the end of the world. We can always look for the future opportunity later. Look at the abundance of trades that we have on watch, and it's keeping that mindset that I think is absolutely important. Aussie 200, again, another one where we are kind of in that all-time high territory. We tapped into these areas. There's this sense where we kind of get the head and shoulders to this as well, where I'm kind of seeing it as left shoulder, head. We've come back up, we've tapped into the right shoulder, and are we going to go? But then also there's the side of, is this then becoming some sort of corrective channel to make its way all the way back up as well, which is also a possibility. What I do like on this is if I look at it on the weekly, and I'll just remove that head and shoulders, we can then see here that it is within a corrective channel. So we do have to be very, very aware that what we had here was we kind of created a base level, we pushed up, and then we basically had this sort of engulfing of the body, and it's giving that level of subjectivity, so it's not the highest of probabilities. It does increase the risk because we are looking at the weekly being aggressively impulsive right now. We then go on to the daily and we see what actually happened. We had a small hook point over here, we had a near miss, we pushed off, we tapped into the low. Unfortunately, if we left a gap, it would have been even better, because then we have more for reason to go to the downside. But then when we responded, we correctively came up, and we left a lot of these like subjective sort of candles, and then we tapped into the area which actually looked very bullish. You can see that we tapped into it, we came down, we actually came back up and tapped into it, but then we rejected more than 50% of the body there. So that's something that I think as well shows that if we were going to continue from this candle, we should have just gone. But on the daily, we did retrace on it, and then the only thing I didn't like about this as well was that we've correctively started to push away. I just really would have liked to see a really big follow through, but you can see from the 4 hour, we did get heavy bodied price action there, a bit of indecision, and then we're kind of going. So now it's in a bit of more of a subjective area. That's why I've drawn on this line in the sand, and I want to see continuation below it. I would really like to see this just really follow through these areas and then give me more deliberate continuation. This doesn't look like my typical sort of bull flag situation, so I'm not too concerned about it. It's just one of those situations where I don't want to get caught into a trade here for then this to just kind of make its way back up, and you know, it's just sitting around about here, comes up here, does this, and then it ends up being more for corrective squeeze. And I don't want to be caught into something like that. So how I want to mitigate against it is I want to see impulsive price action followed by deliberate continuation in these areas, positioning, stop loss above, and then I go in for the short, and keeping it very simple and systematic. I think that's going to benefit me long term as well. And by doing that, I can then trade it into the first inflection point, which is here, which I'm basically running around about 6-ish%, because you can see to the left there's barely anything really holding me back there. The only thing which would be stopping me is the underdevelopment larger structure that could form, right? But if something is deliberate enough where we've cleared that low and then we're getting this and prices below all of that, I'm kind of happy to take that risk. So then something which turns into potentially a 6 to 7% into those inflection areas then moves on to the next one, and then we're looking at really coming down back down here for around about 12%. So I'd be looking at this as an overall range, taking 90% off it, and I'll probably be looking to get out of the market around about 10% personally. Again, this, I'm really actually looking at this to turn into a bit more of a mega trade, to come down all the way down here. But again, it's not something that personally right now is something that I'm going to be looking at those bigger trades right now. But it's there, and then you could basically just see this as, you know, that was the bit of accumulation, the override, and then we're going. So yeah, at the end of the day, I mean, it's an okay trade. It just has a lot of potential to it, but at the same time, it's one of those ones that I think if I can get in position myself, let's just see how it responds and how it moves, and then we'll manage it accordingly. And then if it does turn into a mega trade, great. If it doesn't, it is what it is. Hong Kong 50, honestly, it's okay. I mean, Hong Kong 50 just, it's from a higher time frame perspective, it looks good. Value area, tapped into it once, came down, left the gap, pushed back up, came back up very impulsively, rejected again impulsively. Something which looks nice on the weekly as well, where you can see that we impulsively tapped into it, we rejected, but now we're just kind of correctively squeezing, but it still looks very bearish, which is good. We go to the daily, and then when we look at this a little bit closer, does it make sense? Yeah, absolutely. When I measure it from top to bottom, it's still within the bearish side of things because it's below that 50%. I was looking to see if price was going to tap into these areas and then look to go short, but we didn't. That's completely fine, because I think now with that big candle there, that's a sign that we could potentially just be seeing shorts come into play. I don't want to be getting positioned in those areas, because as we've seen, this isn't within a range. It can still come all the way back up, and it can do that before it comes down, which is even better. It just requires more patience. But I think what I really want to be seeing is that small accumulation off the back end of that, showing that this has failed to continue higher, and then it's just pushed, because it's very irregular to see price create a random floor here, push up, create a large flag, and then just continue to the upside. But in many ways, these things do happen, and then we accumulate here, push down, and then any flag below that ray line, I'm happy to take the short. Again, it could be one that comes in late week. I'm happy to wait for it. I just want to see how that develops, but you can see that once this is open, the floodgates do open up, and then this can turn into quite a big trade. So Hong Kong 50 is actually looking very promising, and I think this is what we've been waiting for some time. There was a trade within there. I just think it came with a lot more risk, and I think if you were looking at the trade in these areas, it's not that you were wrong, it's just at the same time it wasn't the best trade in the world, and you'd have to really see it like this, and then understand that there was just so many different layers to this, where I think it's one of those ones where I'm just happy to not be involved in that. Just see it play through, see the momentum is now kicked in. Is that where the bigger players are stepping in? How can I get better confirmation? Well, I want to see trading below here, and then we could have an abundance of trades on the way down. So again, it's even better that this has happened, because it just shows signs of a potential early sell-off and then continuations to follow. Last but not least is the UK 100. So honestly, UK 100 is actually coming in with the goods. What we can see here is that we had the 1, 2, 3, which is phenomenal because it's on the monthly, right? And then if you look at it a bit closer, you can see that we had this, tapped into override, correctively pushed away, impulsively came up, tapped into the third touch, and now we're just basically hovering in this area here, which is not so bad because we're accumulating. Question I have is, does it make sense for this to really sell off all the way down here? And honestly, I couldn't really see it happening, but what I could probably look at is probably some intraday trades. Looking at the weekly, you can see now we're following through. We've broken through this. Where all of this accumulation was roughly around about here. So where all of this was accumulating, it looks like we are breaking to continue to maybe fill this wick. And then if we fill it, we can then see it a little bit closer. Just reining this in because I don't really keep the trend lines on, but this could then be responding as corrective price action, taps into these areas and then continues higher, and then this becomes one overall larger channel as well equally. What I'm looking at here on the daily is I just want to see that now that we've basically broken that low, what's happening over here? Well, I don't think price is going to come all the way up here to create something larger. I think what's possible is at some point we will probably come back up into these areas for sure. I just think that right now we are seeing that as the low. This is continuation, but this continuation is through the low. This is the top of it. This is creating a base. I want to see how this develops, so I have to go to the 15 on this to get a bit more clarity. But we can again see that internally we could be getting something a bit like this, where we get something and it shapes up and it becomes a two-touch, sells off, get an insurance entry in there and sells off as well. Or you could take the risk entry where you're still well protected. So then if it does come up here and then responds from there and then comes back up for a three-touch, we're still not in a bad place because we could take the break even or a small profit and then we can get repositioned for a short. A two-touch would make sense though, really and truly, just because in terms of an A to B movement, right now we haven't really completed its leg. If we take it from here to here, we take it from the top or the base, there's still room for this to go. And I think that's the nice thing about that, is there's still room for this to move to the downside. So if we can get positioned in there well enough, we'd see that really follow through, and a trade which we can manage into this low for a 2.5 could really turn into a monstrous trade where it turns into 12ish%. And given how the markets are really moving, I wouldn't be surprised if that was impulsive as well. Obviously there would be a level of exhaustion possibly somewhere around about those areas if we were giving good signs of a rejection, but definitely it'll be a mechanical management situation for me where I'll probably be looking to get out around about 8-9% personally. But seeing that follow through, you're probably going to get the full 12 on it. So if that really does shape up, then it's going to be great for the shorts. This is not really showing any signs of rejection. You can see from the 4-hour, look at that, push down, continuation, push down again, next continuation, push down, and it's just going with sequence and responding to structure really well right now. There's a lot going for this pair. So again, neutral thinking as well, because it doesn't have to go short. It could retrace from here and start going long as well. That's why we want to see that deliberate price action formulating over here. If this fails for any reason and it just continues going, then we've got a clear message from the market, and then we can just wait, and then we can see what happens. And then if price just ends up formulating something a little bit like this, it's just not the one where I would definitely be like, okay, that's going long. It could just become messy, and then it does whatever it needs to do, and then it just becomes a part of a very messy way to the downside. Because overall, when you do look at it, this isn't your typical sequence. This is still corrective price action. So again, you don't want to get married to something so zoomed in. You will still want to be careful, and I think that's something that is a conscious reminder for myself when I am having to go to the 15 and the 5 to then look at something a little bit closer. I'm then aware that, okay, fine, I can see it on the 15 and the 5, but can I see it on the weekly? Can I see it on the daily? Can I see it on the 4-hour? Those are the time frames where I want to really be seeing that the directional movement is clear enough, but at the same time, what could I be trading into? What environment am I in? What sort of areas of price could really be pivotal? How am I going to be managing it? There's so many different variations to it, but a lot of these pairs, what we can see is when you look left, the management's pretty smooth. We don't have a lot pulling us back from it. It doesn't, like, usually we won't see price completely reject from this area, for example, where price then comes in, taps into that area there, and then goes all the way up. That's so unusual, and we don't see price action like that. What we tend to usually see, and I'll invert this for a second because it's easier to see, what we tend to see is that when price does end up going, it does end up coming back up to these areas and then sells off, or it gets near enough, close enough like that, and leaves a gap, and then it sells off. So again, it's one of those ones where there's a lot going for it. The pair's looking phenomenal, and we can see it. So just a quick last scan through the pairs. We can see GXY, obviously we're looking at continuation, larger continuation correction, or smaller continuation to just impulsively start rallying. SPX, obviously not going to be looking for anything smaller, large continuation. JP225, it's one of those ones where it's subjective, but at the moment we are looking at short continuation to just see how price responds. Right now, if we can get a short in there, we can play it into that inflection area or shorter. Top 6, we can see that push down, we tapped into this area, we're looking at continuation to the downside. Aussie US dollar, again, continuation, responding to this area, push down, continuation, push down. New Zealand CAD, similar situation, expanding, rejected now, push down, continuation, push down. Could be a little bit larger than this, but again, it's there. Aussie CAD, really nice one because we've had large continuation, failed structure, breaks below, continuation, sells off, and then we're playing off the volume of everything that accumulated in that area. CAD Yen, neutral, but looking for the short to potentially go long, or follow through on the short to manage accordingly. Euro Yen, one of the favorited ones, definitely. If we get continuation, looking to go short from these areas, only because the high time frame is in. Equally, exact same thought process with New Zealand Yen, but with the potential for this to go long at these areas, so we'll manage accordingly, and if it follows through, great. Aussie Yen, more on the short side on this one, not looking for the longs. If it does go long, I'd be looking at one of the other ones, but yeah, push down, continuation, short. I'm pretty sure you can see a commonality in pattern of what I'm really looking at here in the thought process around these trades. Looking for a push down, accumulation in this area, could take some time to develop into late week, and then looking for the rejection on the risk entry there on the 1, 2, 3, push down, continuation, push down again. Again, Euro, Aussie, again, we've got that push, small little gap, not very problematic, strong push, looking for continuation, and then a short into those areas. New Zealand Swiss, again, one of the ones that is there, possibly swapped out for Aussie Swiss. I think if New Zealand Swiss is shaping up, I will most probably just have a quick look and a glance at Aussie Swiss and just compare both, and I might swap out New Zealand Swiss for Aussie Swiss. It's possible, but I do like New Zealand Swiss a little bit more personally. They're both great. And then just basically push down, continuation, push down. And then last but not least is Euro GBP, so we have that push and then continuation below, similar to how we were looking at EuroCAD, I believe. But then again, this isn't a momentum run, so I'm looking at that being a small tight continuation, but clear deliberacy, and then push down continuation into the next level down there. And then obviously, as we just described on UK 100, Aussie 200, HK50 and UK 100. So that's basically the outlook for next week. I think it's looking phenomenal. I think we've got a really good week ahead of us. Obviously, there was a lot of other pairs that almost made it on watch, like Swiss yen, CAD Swiss. Is definitely one that I think it looks interesting, but sometimes you just need to take a step back and just be like, well, I'm not gonna take a full advantage of everything. I'm gonna wait for the ones that really meet my criteria. Aussie New Zealand, I think that has potential as well. That one almost made it on watch for me. Continuation down here would be phenomenal. And yeah, I think a lot of the other ones, they were just, they were kind of okay, just didn't really meet the one. But yeah, I think I'm quite happy with my watch list. GP US dollar, again, not. It's just one of those ones. I think this could just sell off and it just looks so messy, and then the other ones look great. So I was happy to filter out. But you know what? GBP US dollar has been phenomenal this year. Have made much money on it? Probably not, but has it been great to watch? Yeah, absolutely. GP New Zealand, another one. It does look like it's more in a bullish continuation sort of side of things now. So happy to leave the New Zealand ones off because they kind of move together. US dollar CAD, I'm still waiting for this to kind of really break those highs. We've had the DXYs moving. I wouldn't be surprised if this just did something crazy and just went came all the way back up to the upside. US dollar Swiss, again, likewise. Is this just creating more of a flag? It's possible. It's possible that we see something like that and it goes long. And then USD yen. I was kind of tempted with USD yen, but it's one of those ones where I prefer to trade it when it's kind of aligned with the other yen pairs, and in the isolation right now it wasn't really the one. If we see continuation in here, that could be great, but at the moment there's so many phenomenal pairs on watch right now. I just don't want to overdo it. Some of the indices as well. Germany 40, just not ready, to be honest. And I think US 30 as well. Again, it's one of those where filtration, just not the one that I'm going to be looking for the short just yet. If you look at it on the daily as well, similar situation to how we looked at US 100, but look at that bullish power that came in. Honestly, it's just one of those ones where happy to stay clear. That's why I'm just loosely looking at the US 30 because honestly, US 100 because the US 30 and SPX do not look promising at all. Italy 40, I was almost putting this one on watch actually. It was quite interesting. It's coming into high areas that I was interested into, but it didn't quite fill it. It filled this gap though, just about, which is interesting. Value area was there. We began to have early sell-off signs, which is interesting. I think for a pair to really go now, I think this one actually was looking good, but then when I kind of had a little bit of a closer look, it was kind of like, okay, you had this, you had that kind of near miss over there, but we had this, and then we had that, and then you look at it and it's like correction into correction, and then we're kind of doing this. So what's to really stop it from doing something like that? And then it becomes correction into correction into correction, where then that becomes corrective, and then that actually just ends up moving higher. So happy to leave that one off. BTC though, guys, 80,000 pretty much. Phenomenal. This was so anticipated as well. Look how clear that was. Hey, that's gonna go. That's honestly like, it's phenomenal. It's great to know how to trade, honestly. Silver, I think silver could have definitely made it on watch this week. Looking at it, I think we've broken back below here. Continuation, it looks phenomenal for shorts. Soybean for longs, maybe. Wheat, a bit subjective because it's just squeezing, but I wouldn't be surprised if that sold off. Corn at the same time. Corn might pique your interest, but for me this looks like something from experience that this just looks like it's going to go long and it will just catch you out, and then it would be all the way up here. Cocoa, again, it created a base and continuation, could go long Again, not one that I'm really preferred. And as you can see with a lot of the pairs, I'm really looking at pairs like this where, you know, we've tapped into something here, we've pushed, we've had the rejection, and then we get continuation, and then we're basically traded into those lows. And those are the sort of runs that I'm looking at. And I think when you look at some of the trades that I'm taking a lot closer, you can see that that's really what I'm really focusing on. Copper, again, another one which could be very interesting. I think there was a trade over here, and then accumulation there where there's a potential trade there. I think this was one, but one of the brokers that I'm trading with now is they don't offer copper, unfortunately, so I couldn't take a copper trade there. But what I do like is the psychology behind copper. It's a very, very intricate yet nice one to see. You know, push down, broke the low, come back up, retested, broke this, now it's creating continuation, and then we could see this completely follow through now and just continue, and I think that would be great, absolutely great. But again, so many different pairs on watch. Palladium had potential as well over here, where we came in, tapped into that area, and then we just dramatically sold off, and now we could just see continuation. Again, Palladium just doesn't have great spreads for me, so happy to leave that one off. Platinum did eventually do this. I know I was looking at it for a while. That was just too extended for me, and I just left it in the end. But let's trade there. UK oil, I think it's one that you can get trapped into right now and just think that, oh, there could be a trade, this and that. US oil, I think it's a bit more clear. And I think a lot of people might be looking at something like that, but when you do look at it in hindsight and just zoom out a little bit more, kind of in the middle of nowhere right now, I think the best thing to do really for oil is just wait. If for any reason oil comes back up into these areas and then sells, that makes sense, right? But what are you actually trading in? You're trading in this squeeze. So what do we know? Well, the squeezes usually come to an end. Eventually it will come into these areas, and then we can get the longs, and we can see our price response, and then we could see oil come all the way back up into these key value areas, and I think that's mainly what I'm looking at. So I'll cut the video short here anyway, because it's been going on for over 2 hours, maybe, I don't know, 60 minutes. But I hope this video was very useful, and I think there was a lot of value with a lot of the things that I did cover in this video. And I think most importantly is you don't need to have this much on watch. I'll be honest with you, I think this just comes in because I can manage that much and I can cope with it. But there was a time when I was trading when less was a lot more. And I think sometimes when you just have a few simple pairs on, which are very clear and deliberate, and I think something like New Zealand CAD, you take in Aussie US dollar, New Zealand US dollar, maybe Euro US dollar, you don't have to have all three, CAD yen, and you're in, that's enough. That's more than enough, right? And if the trade doesn't come in, the trade doesn't come in. But what I always did do was I always had some other stuff on the line that I was analyzing as well. The one thing that you don't want to be doing early on in the journey is just trading everything. You don't want to have a watch list like this where you have everything, and every day you just come in and like, oh, what can I trade today? I think that's what makes trading very, very difficult, because then you're going to find opportunities all the time, and you're going to really mess around with your strategy and your ability to practice capital preservation, where when you do have less, you can practice capital preservation. You know that, okay, I don't technically need to be by the charts today because there's this much. I need time for it to develop. It needs, let's say, 14 hours to develop, so I'll give it a lot more time. I can set an alert, walk away, I can go do some other things. When you've got so many pairs like this, you kind of need to be more available to be able to take advantage of things, because when volatility does kick in, and let's say you're waiting for something like this, or something like the US 100 trade, it could just be hovering out here for however long, and then all of a sudden it drops off. And then over the course of the next, like, you know, couple hours, it shapes up. You've got more than enough time to take advantage of that. Whereas if it's another case where, let's say, we've already dropped off and now we're in this area, and it's just responding to smaller, tighter continuations because we're so high up in the run, you could miss like 6-7 trades, and then you come back and look at it 8 hours later and it's not there. So I know for a fact that with this trade, I don't need to be looking at it on Monday. I'll be looking at it on Tuesday, Wednesday, Thursday. Those are the days I'll be looking at this. So I know in the back of my mind that there's a lot of trades here that won't be ready shaping up early week, they'll be late week. So it gives me that variation of less is more, because early on in the week I'll be looking at a lot less, at the end of the week I'll be looking at a lot less as well, because some of the pairs will be completely written off. and I won't be watching them directly, but I'll still be monitoring them, because I still think it's equally important. Because sometimes what could happen is, let's say the market's up here and then suddenly the market drops down here, but it comes all the way back up here, and then you're kind of like, okay, the trade's gone, it's not what I thought it was. And then what happens is, over the course of that day, it drops off again, and then during the evening and the next day in the morning, then up to New York session, you get this. And they're not much different, these two scenarios. It's just one happened to pull back sharply and come back in, and then the other one just was very clean. So again, something to just bear in mind, that if I was to have written off this trade here when it pulled up over here and closed, and then it dropped off, I would have never seen this and then been able to take advantage of that run, and I still would have got involved in the same run. It's just price didn't give me exactly what I was looking for. And I think, again, that comes into looking for perfection. And a lot of the time I have done that in the past, where, especially with these New Zealand related pairs like Euro New Zealand, Aussie New Zealand, or Euro Aussie, and so forth. I've done that many times where you know, price has done this, tapped into that low, pushed away, and then it's, for example, I thought, okay, it's tapped into that, pushed away. I would have then neglected any sort of trades in these areas, because I would have no longer been looking at it. I would have then seen it as it's going higher. Again, over here you can see that it created this expanding through the low. If you know exactly what I mean, it then did that, and at the same time could have completely missed this trade. There was a trade there. It's just, obviously this wasn't the best trade in the world, I'll be honest with you, but there was a trade here, and could have completely written it off, because either you held a bias to think that this gap had to get filled, but then at the same time you were anticipating something else, like you were looking for the long, so then you were looking for this, but then you failed to evolve with the market and realize that this could be something else. This could be, let's say, neutral for a minute, and then what happened was you looked at it a little bit closer. Now I'm going to the 5 here, but you failed to create the continuation here. You didn't have that drawn on, you just had it like this, and then you drew something like that, and then you said, oh shit, okay, price came here. And then I think even at this point though, you could really convince yourself that, okay, it's kept in here, we squeezed, and now we've broken to the upside. And this isn't completely wrong, and I think a lot of people need to understand that if you did have something like that and you would take that long, there's nothing wrong with that. That makes sense. That makes a lot of sense for this to then be the move where that was all corrective, came into these areas to then look for the long. But instead we didn't get that, and what we did get over the course of the next few candles was, and I think because this is larger, I'll just go back to the 1 hour. What we did get over here was, you know, price was stalling. We had that massive push. We then wait for the next candle, and we can see, okay, full rejection. At that point there, you might be thinking it's a bit lost, but then you'll see from the next candle, if that retraced a bit higher, you could have potentially got an entry in there. And I think sometimes trades do go missed. And is that the easiest one to decipher? Absolutely not. That's actually quite difficult to decipher. But when you do start piecing the puzzle together and you start to realize that actually there is a lot of context behind this, you can then see it later on, but not in the moment. And I think what you need to do is train yourself to see more of these things in the moment, because of that neutral thinking. If you understood that this is more than enough, it doesn't technically need to come to the downside. This actually could be acting as a head and shoulders, where you have your left shoulder, head coming down, right shoulder coming down here, and so forth. And then you look at it here where it did actually create a neckline. It's there, everything is there. So what we're actually technically looking at is there's a potential for a hover, for this to then be the short. Yeah, absolutely, that's there. Was this last leg very impulsive? Yeah, it was. So again, you look at it on the 15, then you look at it, has this got the elements of something that could potentially be a good trade? Well, it does, because that potentially could be the middle section for this to potentially be an expanding with a subjective first touch, creates a 1, 2, 3, retest the back end of that low, and then, you know, that's acting as the larger head and shoulders. Then this ends up being a trade. Is that worth taking a risk? Yeah, it's definitely on the higher end of being a riskier trade, but you could have then looked at it as, if it does start breaking below these areas, then I know that that could definitely be something. And then I don't want to really have to zoom in so low, but if we did get something in there, then you could be taking a decent trade in there, and then you get that sort of typical sort of accumulation sort of areas here where it's broken the low now, it's then accumulating in that area, and you could be looking at the next short position, and then what happens is it just follows through. and then you look back on it and you're like, actually, hang on a second, in isolation, that's not so bad. So again, like I said, these trades, if they go missed, they go missed, but it's one of those things where you don't want to just write pairs off. You want to still learn from them, because price tends to repeat itself, and when you start to recognize things, you end up not only being able to read that one particular price, but when something like that does happen, like 3 years later or 6 months or even the next day, you're just able to actually read through it and take advantage of it. And I think that's one of the things that has really benefited me as well over time, looking back on it. Since it was mentioned recently, it kind of just hit me, and I was like, actually, you know what, a lot of these structures, because I didn't capitalize on them, because I lost money, because I had a bias and all these things, I learned from them, and I realized that I didn't actually just lose on a trade. I actually gained a lesson from it subconsciously, which I then was able to kind of go over and see so many times, because maybe I was a bit hard-headed and I didn't learn from them in the moment. I was able to learn from them later. I was able to make some money. So anyway, kind of just ending it there. Hope you guys enjoyed this video, and I will catch you guys in the next one.